Welcome to yet another video of Be Money Aware. Let's talk about income from business and profession. A profession requires special expertise, skill, and knowledge like that of CA, lawyer, doctor, engineer, architect, etc. In other words, she utilizes either his, her intellectual or manual skills to earn the livelihood. Profession includes vocation. Vocation refers to the natural abilities and skills of a person to do certain work such as singing, dancing, as they do not require particular qualification or training, and thus these are pure natural abilities. Business refers to any kind of economic activity done for earning profits. Running a hotel, owning a garments shop, travel agency, etc. Depending on the nature and size of the business, some of the legal entity options available are sole proprietorship, limited liability partnership, private company, public company, and joint venture. Profits and losses earned from trading, equity intraday, F&O overnight, intraday are considered as business income. Income from trading can be further classified as speculative income and non-speculative business income. Income trading futures and options, equity, currency, commodity is considered a non-speculative business. The term income from business and profession means any income shown in profit and loss account. As per Income Tax Act, one has to first add all the income earned related to business transactions during a financial year and then deduct all the expenses related to the business. Total net profit equals income, expenses. Total net profit is the total income taxable under the head profits and gains of business or profession. There is also a simpler method of offering income to tax on a presumptive basis under Section 44AD, Section 44ADA and Section 44AE. If one adopts presumptive taxation, then one has to declare income at the prescribed rate and no other deductions are allowed. One has to pay the entire advance tax by the 15th of March. If you are a businessman or a professional, typically you need to maintain the books of accounts and compute your profits to file your income tax returns. Specified books of account to be maintained as per Rule 6F. Cash book having day-to-day cash transactions. Journal according to Mercantile System of Accounting. Record of all cash receipts and payments which show cash balance in hand at the end of the day or at the end of each month, not exceeding a month. Carbon copies of bills or receipts of more than 25 rupees in value issued by you must be kept. Carbon copies of bills of expenditure of more than 50 rupees in value incurred by you must be kept. A ledger. There are further requirements for those who are involved in the medical profession. Documents required for finding income. A balance sheet is a financial statement that reports a company's assets, liabilities and shareholders' equity for a particular year. Profit and loss statement is used by businesses to record their incomes and gains credited and expenses and losses debited. Balance sheet and profit and loss statement are required to filed in ITR for business and professional income not going for presumptive taxation. At times Income Tax Department wants the books to be audited. The applicability of tax audit depends upon the turnover, sales, gross receipts of the business or profession, as shown in the image. For professions limit is above 50 lakhs. For business limit is above 10 crores. Tax audit is the examination and review of the books of accounts of a taxpayer having income from business or profession. It comes under Section 44AB of the Income Tax Act. The taxpayer should appoint a practicing chartered accountant to audit the books of accounts within due dates. The penalty leviable for non-maintenance of accounting records could go up to 25,000 rupees under Section 271A. Further, a penalty equal to a lower of 1.5 lakh rupees or 0.5% of gross receipts or turnover can be levied under Section 271B for not getting books audited under Section 44AB. Chartered accountant files audit report in Form 3CB and 3CD or Form 3CA and 3CD. Taxpayer files income tax return in Form ITR3. Form 3CA and 3CB is the statement with auditor's information while Form 3CD is the statement with details of the tax audit. Table shows how opting for presumptive taxation reduces the tax liability. Once you have opted for presumptive taxation, you cannot claim any occupational expenses as a deduction again. Benefits of presumptive taxation. If your receipts are in digital form, not cash, then only 6% of your income is net income and you pay tax on that income. You do not need to maintain accounting records. You do not need to get the accounting records audit. You must pay an advance tax, but instead of estimating revenue and paying taxes every quarter, you can pay all your pre-tax before March 31st. While filing income from business and profession in ITR, you have to decide whether one is going for presumptive taxation or not. Who can opt for presumptive taxation? Professionals, which includes freelancers, YouTubers, doctors, CA with earnings less than 50 lakhs. They can show net income to be 50% of the gross receipts. Business with turnover of less than 2 crore rupees. They can pay tax on 8% of their gross receipts. And transporters. Income from stock market can also be considered as income from business, conditions apply, or income from capital gain. Taxes on intraday share trading are very different from delivery trading. Income from business can be further classified as speculative income and non-speculative business income. For example, income through trading in derivatives, futures and options, currency and commodities is treated as non-speculative business income. Both the speculative income and non-speculative business income are clubbed under the head of business income and added to your total income, and the gross figure is taxed. However, the difference arises in carry forward and set off. If your income resulted in a loss, you could adjust it from income from remaining heads. This is called set off losses. As shown in the table, non-speculative business losses can be written off against non-speculative business profits or against speculative income or even other types of income except salary income. Speculative losses can only be written off against speculative profits and not against any other income. The table shows which type of losses can be carried over and for how long. Any unadjusted non-speculative loss can be carried forward for 8 years. Unadjusted speculative losses can be carried forward for 4 years. If one is involved in stock trading, one may have to get books audited. Audit applies to a business based on its turnover. For trading, audit must be done in following cases. For trading turnover over 5 crores. For trading turnover less than 2 crores but has incurred losses or profits less 6%. Let's look into calculation of turnover for trading. For intraday futures, turnover is the absolute sum of profits and losses. For options, the absolute sum of profits and losses plus premium on sale of options. Let's see it with examples. For intraday, if I buy 10 shares of company N at 6,000 rupees and sell them on the same day at 5,500 rupees, then the loss will be minus 5,000 rupees. If I buy 20 shares of company A at 1,200 rupees and sell them on the same day at 1,300, then the profit will be 2,000. So intraday turnover will be equals 5,000 plus 2,000 equals 7,000. For futures, if I buy 75 units, one lot of Nifty futures at 14,500 rupees and sell them on the same day at 14,450 rupees, then the loss will be minus 3,750 rupees. If I buy 25 units, one lot of Bank Nifty futures at 33,300 rupees and sell them on the same day at 33,350, then the profit will be 1,250. Futures turnover will be equals 3,750 plus 1,250 equals 5,000. For options, which comes under non-speculative business income, turnover is the absolute sum of profits and losses plus premium on sale of options. If I buy 25 units, one lot of Bank Nifty options at 500 rupees and sell them on the same day at 450 rupees, then the loss will be minus 1,250 rupees. Sale of options will be 450 * 25 equals 11,250. Turnover will be 1,250 plus 11,250 equals 12,500. If I buy 75 units, one lot of Nifty options at 300 rupees and sell them on the same day at 350, then the profit will be 3,750. Sale of options will be 350 * 75 equals 26,250. Turnover will be 3,750 plus 26,250 equals 40,000. Total turnover will be equals 12,500 plus 40,000 equals 52,500. Get profit and loss statement from broker. So the income from the stock market transaction can be divided on the basis of time factor and job factor. 1. Short-term gains. 2. Long-term gains. Job factor means whether 1. Your involvement in the stock market is a full-time job. 2. Your involvement in the stock market is on a part-time basis. Tax treatment on the basis of time factor. Short-term capital gains occurs when profits from the stock market are earned by the trades that are squared up within 12 months. Here, in this case, the tax rate on profit is 15%. However, in the case of short-term capital loss, the loss could be carried forward for the forthcoming 8 years, that is, the loss could be set off with the short-term capital gains, if there is any, for the forthcoming 8 consecutive years. Moving to long-term capital gain, it occurs when someone earns profit through the trades squared up after 12 months. Here in this case the tax rate is lower, i.e. it is 10% after 1 lakh. If the income from share market activity accounts for a significant chunk of your overall income, then you will have to show your share market activity as business income rather than as capital gains. Tax on the basis of job factor. If an individual is trading in the stock market on part-time, i.e. along with another full-time business, then it shall be treated equivalent to investment. Consequently, income from stocks, shares shall be treated as business income. If the core business of an individual is trading in a partnership firm or in a company and it's specified in the chartered document that stocks, shares are used as stock in trade, then trading of stock, shares is a full-time occupation of an individual, and so the consequent income shall be treated as a speculative business income. Taxpayers have now been offered a choice of how they want to treat such income. Once they choose, they must however continue the same method in subsequent years too, unless there is a major change in circumstances. If the taxpayer himself opts to treat his listed shares as stock in trade, the income shall be treated as business income, irrespective of the period of holding of listed shares. If the taxpayer opts to treat the income as capital gains, the assessing officer shall not put it to dispute. This is applicable for listed shares held for a period of more than 12 months. In all other cases, the nature of transaction, whether capital gains or business income, shall continue to be decided basis the concept of significant trading activity and the intention of the taxpayer to hold shares as stock or as investment. Remember, your defining income should be consistent across years as per CBDT Notice of 2016. ITRs for income from business or profession. If you have income from business and profession, then you cannot file ITR1 or ITR2. An individual can only file following ITRs. ITR3 for individuals to report their income from a business or a profession. Salaried individuals who have income from intraday trading in shares or income from futures and options should file ITR3. Individuals can report income from salaries, house property, capital gains, business or profession, including presumptive income and other sources in ITR3. ITR4 for individuals, huff and partnership firms for their income under presumptive scheme of taxation. ITR4 is for income from a business whose turnover is up to 2 crore rupees and taxed under Section 44 AD. ITR4 is for income from a profession whose turnover is up to 50 lakh rupees and taxed under Section 44 ADA. A freelancer carrying out a notified profession can file ITR4. ITR5 for partnership firms, LLP, AOP and BOI. Business entities such as LLP, partnership firms, AOP and BOI can file ITR5 for reporting income from business and profession and any other source of income. ITR6 is the income tax return for companies to file income from business or profession and any other sources of income. ITR7 is the income tax return for companies, associations and trusts claiming income tax exemption. How to download new ITR utility. For FY 2020-21 or AY 2021-22 there is no Excel, Java utility. ITR1 and ITR4 can be filed online. To file offline you need to download the new ITR utility which uses JSON format. Go to the new e-filing website www.incometax.gov.in. Download the common offline utility ITR1 to ITR4 for your Windows, Mac. A file ITDE filing _7 setup 1.0.2.zip is downloaded. Unzip the file. You will see two files. Click on the X file. Choose the ITR. ITR3 is for those having business or profession. Income under ITR3 form may include income from house property, salary, pension, capital gain and income from other source. If ITR3 select schedules that meets your requirements. For filling income from business code for your business. Fill in income applicable to you. Income from salary. Income from house property. Income from capital gains. Income from other sources. Income from business and profession. Fill in income from speculative business. Set off any losses in the current year. Fill in CFL schedule for carrying forward losses if any. If only income from business and profession and choosing presumptive taxation, do ITR4. Check if you can file ITR4. Choose the presumptive taxation. Fill in the business code. Check out our free resources. Get free guides like Income Tax Guide, Investing, EPF etc. Check out our books and ebooks. Learn and practice basics of income by buying our workbook. Thanks for watching the video. Hope it helped. Please share your opinion by writing comments, liking. For more such videos subscribe to our channel Be Money Aware.